Hello and welcome to Investment Insight, your clear take on the markets. Let's get started. Today we are undertaking, well, a critical deep dive, because over the past few weeks, three really massive global events happen almost back to back.
That's right. We've got a major tech alliance shaping up,
Yeah.
a pretty dangerous geopolitical shift, and a really high-stakes trade negotiation all happening together.
Exactly. And for investors, it feels like the ground is shifting under our feet. So today we want to give you a clear map.
Right. The analysis suggests we really need to look beyond just, the next earnings report. These are structural changes. We need to understand how these events reshape fundamentally the investment landscape.
Okay, let's get into it. First up, this deepening alliance between NVIDIA and Korea. This sounds pretty significant for AI's future.
It really is. And what's striking is the level of commitment here. Jensen Huang, NVIDIA's CEO, he used the APEC CEO Summit, as his stage.
He did, and he didn't just say nice things. Reports say he called Korea the only country with, full stack capacity?
Full stack capacity to lead the AI revolution. Yeah. Big words.
And he put money behind it, right. Confirmation of plans to send over 250,000 GPUs to Korea.
That's the number. 250,000 GPUs. The stated goal. Making Korea one of the most powerful AI infrastructure nations worldwide. That's a serious investment.
So what does this mean for companies like Samsung or SK Hynix? Are they just fulfilling orders?
Well, that's the first big shift, you see. The analysis shows they're not just suppliers anymore. They've been kind of officially upgraded.
Upgraded how?
To core technology partners. That's the language being used.
Okay, but is that just, fancy talk? Does it actually change the investment case? Like, investing in SK Hynix used to be about timing the memory chip cycle, right?
It's fundamentally different now. Investing in these companies, it's becoming a direct bet on the long-term structural growth of AI itself. It's moving beyond that old boom and bust chip cycle.
Can you give an example?
Sure. Samsung, for instance. They're partnering deeply on the foundry side, the manufacturing. Specifically, the 4-nanometer process for those critical HBM4 memory chips.
HBM4, those are for NVIDIA's next big GPU, the Rubin one.
Exactly. So Samsung isn't just selling parts. They're integral to NVIDIA's future roadmap. They're locked in. SK Hynix, too, their HBM collaboration is expanding.
Locked in. Okay, that sounds like NVIDIA is playing chess here. How are they making sure competitors like AMD or Intel can't just swoop in?
That brings us to NVIDIA's, let's call it lock-in maneuver. It's about embedding their own tech CUDA NVLink really deep into Korea's key industries.
Like their software and connection standards.
Precisely. Think of it like choosing an operating system for your phone, maybe.
Okay.
Once you build everything, all your apps, your whole way of working on that one system, say iOS or Android, switching to the other one is, it's almost impossible, right? You have to rebuild everything from scratch.
Right. It's a massive pain.
It's the same idea here, but on a national industrial scale. Korea builds its AI future on NVIDIA's platform, making it incredibly difficult and costly to switch later.
So that creates a big dependency risk for Korea.
It does. That's the risk side. But the flip side is that opportunity. Guaranteed growth, guaranteed partnership at the cutting edge of AI.
And speaking of AI moving forward, the analysis suggests it's not just about cloud stuff like ChatGPT anymore.
Absolutely not. The next big wave is AI in the physical world. AI manufacturing.
Okay, like what?
Well, look at the partnership with Hyundai Motor Group. It goes way beyond just self-driving cars. They're talking about transforming Hyundai's factories worldwide.
Into what?
Into AI-based smart factories, using AI to optimize every step of production.
Okay, so the investment takeaway here is look beyond the obvious cloud players.
Exactly. Look for those traditional manufacturing sectors, cars, steel, ships, you name it, that are doing this AI conversion. That's where a lot of the value creation is going to happen.
Okay, understood. Let's shift gears now. From tech opportunity to, geopolitical danger. This next piece is concerning. The potential return of nuclear testing.
Yeah, this one is sobering. The analysis confirms a really significant development. The NNSA, that's the National Nuclear Security Administration here in the U.S.
Right.
They've received instructions from the president. Prepare the Nevada test site for critical nuclear tests.
And let's be crystal clear. Critical tests means actual nuclear explosions, right? Not just simulations or subcritical stuff.
That's the understanding, yes. Actual detonations.
Right.
And adding to the urgency, reports indicate the administration is pushing the NNSA hard.
Pushing them how?
To shorten the prep time. Experts usually say it takes around 36 months to be ready for such a test. The push is to get that down to maybe 18 to 24 months.
Wow. That signals a real intent to potentially move quickly.
It certainly suggests a desire for visible progress, let's say,
Yeah.
and the global reaction was immediate and predictable, unfortunately.
What happened?
It basically threw open Pandora's box again on the arms race front. Russia's parliament, the Duma, instantly voted to withdraw their ratification of the CTBT.
The Comprehensive Test Ban Treaty.
Exactly. President Putin signed it into law, basically saying, if the U.S. tests, we reserve the right to test too.
And China.
China used this moment to officially confirm they're moving ahead with plans to more than double their nuclear arsenal, aiming for over 1,000 warheads. That ditches their old minimum deterrence posture.
Okay, so this isn't just a temporary flare-up. This feels like geopolitical risk just got permanently dialed up.
That's the key insight. It's not an intermittent problem anymore. Think of it like this. If geopolitical risk used to be like getting an occasional flat tire.
Yeah, you pull over, you fix it, you move on.
Right. Now it's like the check engine light is permanently on in your investment dashboard. It's signaling constant structural volatility.
So what does that mean for investors, practically?
It means you have to factor in a higher baseline of risk. Allocate for that structural rise in volatility. It probably means adopting more defensive strategies in your portfolio overall.
And within the defense sector itself, does the focus shift?
Massively. Investment is moving away from just conventional stuff tanks, artillery, and towards the big-ticket strategic systems. Strategic weapons, nuclear delivery systems, think new ICBMs, strategic bombers, nuclear subs. Companies like Northrop Grumman are key players there.
Okay.
And, crucially, advanced missile defense. Things like the U.S. Golden Dome project that involves players like Lockheed Martin, RTX. Those are the areas seeing increased focus and funding.
And when you have this kind of instability, this level of questioning about global order, where does money tend to go for safety?
It goes to the ultimate safe haven asset. When trust in, government promises and fiat currency starts to wobble because of things like a renewed nuclear arms race, physical assets, especially gold, tend to reassert their value. We're seeing signs that demand for gold as a hedge against this kind of deep global instability is structurally increasing.
Okay. A lot to process there. Let's turn to the third major event, the APEC summit in Gyeongju. APEC being the Asia-Pacific Economic Cooperation Forum. This one, at least, offered maybe a bit of breathing room.
It did. The most significant sort of practical result was this one-year trade truce agreed between President Trump and President Xi.
Right. And that's huge because it delays those threatened 100% U.S. tariffs on Chinese goods.
And it also delays China potentially restricting exports of critical rare earth materials and technology. So, yes, a temporary but very crucial pause.
How should we think about this truce?
Well, a simple analogy might be helpful. Imagine you have a massive loan payment due.
Okay.
The bank suddenly calls and says, okay, we'll give you a one-year extension. The debt, the underlying problem, it's still there. It hasn't gone away. But you've got this vital 12-month window, time to maybe restructure, manage your risk, get your house in order before that pressure comes back on.
So the investment takeaway is there's a golden time now, about 12 months.
That's a good way to put it. A window where the biggest immediate threat, a full-blown trade war, is off the table. So maybe room for more aggressive investment in the short term.
But with a deadline.
Absolutely. You must use this time to build resilience into your portfolio before that truce potentially expires next year. Don't get caught flat-footed.
Okay. What else came out of APEC besides the truce?
Two other big policy signals, really. First, AI is becoming what you might call a policy stock.
What does that mean?
Well, the final Gyeongju declaration from the summit included an agreement on APEC AI governance guidelines.
Why do governance guidelines matter to investors?
Because it shows AI isn't just Wild West tech anymore. It's moving into being a policy industry. Governments are stepping in to manage it, focusing on things like safety, reliability, ethics.
So investors should look for what? Companies playing by the rules.
Exactly. Companies that align with these emerging government guidelines. And also companies involved in those big government-backed AI infrastructure projects, which, circles back to firms like Samsung and SK Hynix we discussed earlier.
Got it. And the second policy shift from APEC?
Supply chain diversification. It's now officially endorsed as a shared policy goal.
So moving manufacturing, diversifying away from China. That's not just companies wanting to do it, it's governments actively pushing for it now.
That's the signal. The summit formalized supply chain transparency and diversification. It confirms that this whole decoupling or de-risking trend is a real long-term global megatrend.
Which validates investments in...
Alternative manufacturing hubs, right? India, Vietnam, Mexico, they're the obvious ones. But also the technology enabling this shift, logistics tech, warehouse automation, smart factory solutions. And one final, more subtle point from APEC, market bifurcation.
Splitting the market, how so?
Well, observers noted that President Xi's messages about openness and cooperation seem mainly aimed at countries outside the U.S. sphere.
Interesting.
Suggesting a potential future where global capital and trade flows start to split into two somewhat separate blocks, one centered around the U.S., the other perhaps more aligned with China and other non-U.S. economies.
So the strategy implication is don't just look at the U.S.
Right. Look for opportunities perhaps in European or Southeast Asian companies that might actually benefit from strengthening ties with China, navigating this structural separation.
Okay, let's try to wrap our heads around all this. We've covered a lot of ground.
We have three huge forces, really. First, that deep tech lock-in and structural AI growth, driven by NVIDIA's moves in Korea. Second, the stark return of ultimate geopolitical risk, the nuclear angle. And third, the APEC summit, providing that temporary trade truce, but also highlighting the policy focus on AI governance and supply chains.
So the big takeaways for our listeners. What are the core concepts they need to grasp?
I think two things stand out. First, the shift away from thinking about things like semiconductors purely in terms of cycles, or moving towards investing in long-term structural AI growth. That's a big mindset change.
Okay. And the second?
The second is that high-level geopolitical risk, especially the nuclear dimension, isn't just background noise anymore. It has to be actively factored into how you price assets and construct portfolios. It's now a permanent feature, not a bug. And maybe a final provocative thought to leave you with, building on our discussion.
Go for it.
The analysis we looked at suggests Korea is trying to position itself cleverly as a kind of geopolitical safe zone in this growing U.S.-China rivalry, especially for critical tech like chips and AI, sort of a hedge against the risks around Taiwan.
Okay, that makes sense.
But now, consider the sudden return of this nuclear competition we just talked about. How might Korea's safe zone status change? Or how might it be leveraged differently by the U.S. or China or others in this much more dangerous security environment? Something to think about.
Definitely something to mull over. Thank you for joining us for this deep dive into the forces reshaping global investment. Don't forget to subscribe and hit that like button.